Hello everyone, I've missed a few things this week, so let's get back up to date. I'm going to go with a slightly different format and release a series of short videos with one focus in each. That way there isn't too much information to absorb in one go, essentially giving bite-sized chunks of economic data and a brief commentary on each. Hopefully that works better than one long video. In this one, I want to talk a little bit about the ADP Employment Report. The ADP National Employment Report. First of all, let's get an idea of what the market was expecting. The consensus estimate for the report was for private employers to have added 228,000 jobs in June, but that's not what we got. The US private sector experienced a significant boost in employment, adding 497,000 jobs. This was driven by consumer-facing services, which are the kind of services that are face-to-face or in person, such as banking, delivery or food services, to name a few. Further increases were seen in leisure and hospitality, trade and transportation, and education and health services sectors. Here comes the plot twist. Not every sector has been invited to this job creation party. While some are enjoying a banquet of opportunity, others, such as manufacturing, information, and finance, are apparently on a diet, experiencing declines. The S&P immediately fell on this report. Not only was it twice the expected figure, but also there have been continued concerns about wage growth and a tight labour market, which this report didn't help with at all. Usually a boost in employment would be good news, but the problem here is that the Fed is battling to quench inflation, and when you get wage gains, that makes the Fed's job a lot harder. This report gives us some information on this, so if we look into it we can see that wage growth was more nuanced. That is to say there's some underlying aspects here we need to pay attention to. Annual pay was up by 6.4% year over year, marking a continued trend of wage growth. However, the pace of these gains has slowed. For those who stayed in their jobs, the year-over-year pay increase was 6.4%, a slight decrease from 6.6% in May. For those who changed jobs, the slowdown was more pronounced. Pay gains for job changes have been slowing for 12 consecutive months, reaching 11.2% in June, the slowest pace of growth since October 2021, and that's quite a big deal. It seems competition in hiring is slowing down, as wages for people switching jobs is slowing, and that removes a big potential worry when it comes to inflationary pressure. So this report suggests a complex picture of the US labour market. While job growth was strong overall, it was not evenly distributed across sectors, regions, or establishment sizes. And, while wages continued to grow, the pace of this growth has slowed, particularly for those changing jobs. In conclusion, the reported headline figure was a real shocker, but we saw that gains weren't universal, and we continued to see wage increases slow on a year-over-year basis.